Welcome, guys, to another episode of Liquidity in the Markets. I'm your host, Syed, and joining me today is a very, very special guest, a crazy person, just as much as I am. And that's a pretty bold statement right there, because I don't tend to find too many people that are quite as crazy as I am. But who better to prove their craziness than to take a risk onto a fellow crazy person and take it in a way that most people would generally not even think about. So joining me today is one of our very, very early seed investors for Liquidity. Today we have on Michael Durham, Managing Director of Positive Sum Capital. Michael, great to have you on, buddy.
Thanks for having me. That's quite a compliment. You got me quite out of surprise here too. I thought we were going to be doing audio. I was laying in bed and thought, well, I'm going to relax and do this. And next thing you know, I got to get the video going. So
listen, man. What is it that we do? We were constantly pivoting, right? And that's my thing. Let's bombard each other with the best way to shoot a podcast is, especially something like this, is to catch someone completely off guard. No scripts. Nothing agreed upon or anything. Look, let's just get it done, because the best part about these kinds of conversations are let's let them be as raw as they possibly can, and let's have the outsiders really take a look at it and gain an understanding of what actually goes on behind the scenes. And most people will be surprised to see that, you know, how normal these things actually are. And hopefully by doing it this way, we're gonna encourage others to get more and more comfortable in being uncomfortable. All right. So, Michael, I am not going to even attempt to try to do justice by giving an introduction. So, why don't you give our audience a little bit okay, let me take that back. Not a little bit. Why don't you give them a lot bit about on your background, how you got to where you got to today, and how the hell do you put in the kind of money into a company when you haven't even met the people, and doing so within the time span of what, a week?
Yeah, like you said, I'm crazy. That's a lot of questions in one. I guess I'll start with the background and get into, kind of what inspired us about the whole opportunity. I always wanted to be an entrepreneur. It's my first job out of college. I sold accounting software, and it was for companies that were outgrowing QuickBooks. So back then, QuickBooks had a transaction limit. And so they had to, grow into a mid-market kind of package. And so it was really cool because I got to interview these successful entrepreneurs that were growing, obviously, in size and needed a more robust package. So it was just a really inspiring thing to see. Always kind of wanted to be an entrepreneur, but getting to kind of that firsthand experience was really exciting. So from there, I worked a lot of different jobs, got a lot of different experience, a lot of jobs for, a couple weeks, leave at lunch, that type of thing. I mean, I could tell you I've been in so many different industries. It just gave me so much different experience. So a lot of horrible jobs, a lot of got to see a lot of different industries. Started working at a advertising technologies / internet marketing company. And from there, I got recruited into an opportunity with a similar type of company where I was able to get an equity stake. And so that was...
What year was this? What year are we talking about?
That would have been, if I can guess, that would have been about 2006. And so I was in Las Vegas at the time working with this company, and then moved to Salt Lake City for this opportunity. And so, being able to, without putting in any actual investment, just sweat equity, get 40% of this company. In return, I ended up doing all the work for it for the most part. But I mean, it ended up being, depending on how you define it, it was successful, as far as revenue and what should have been profitability. But the person that recruited me, and so this one, I don't want to mention any names of companies or any individuals, obviously, but I guess the nicest or simplest way to put it was the funds were not managed by me, and they were quite mismanaged, to say the least, really. And so we should have been profitable, and we built a really solid business, but we weren't because of the just gross mismanagement of the funds. And so some things I just, should have seen just right in front of my face, in hindsight, it's just so obvious. But, first opportunity to get equity in a company, it was just, I put up with a lot of stuff, right? And I also got to see, because of the mismanagement of the funds, we shouldn't have really needed any investment, beyond our first little kind of mini seed round that we did, because we should have been profitable. It was an internet marketing company. I mean, it was bare bones. We didn't need a lot of, we used leased software. We weren't developing anything like that. I mean, just a really simple operation, high revenue, low overhead type business. But kind of as a side benefit of the mismanagement of the funds, we needed to raise some more capital. So I got to really kind of peek behind the curtain of angel investing, and met with a really great group actually that had a lot of companies that were in kind of the same stage that we were in. And so it was just that again was something that I feel like really shaped me, and I always wanted to do that, at some point in my life when I was able to have some level of success. So from there, I said, hey, I got this whole entrepreneurship thing down. This is great. Anything that I'm going to do from now on, I want to manage the finances. I wasn't, by any means like a finance major. I was more, studied marketing in school, but I had to learn it fast. And so, I learned accounting software, even though I sold it back then many years before. I really didn't know how to run it in the same sense. So I learned quickly.
And that's the best way to learn, by the way. I mean, you and I, we discuss this all the time, right? The importance of what we think we're learning when we're actually going to school, and then realizing once we get out of it that,
no,
what the hell did I actually learn? This
completely. And that's even the thing, with finance was the hardest class in college. And I had to, not had to, but I was fortunate enough that I was on a study abroad in Thailand and was able to take the finance class there and get credit, because they took it very easy on us Americans. But it just didn't click then, because you didn't have the application for it. So it was just very like, just abstract things that, you just didn't have the application to really understand, like, and it wasn't, without having the experience too, it was just boring, just numbers and math, at that time. So really my finance education was all self-learned. And, since then, I think I've spent a lot of time, many thousands of hours learning all I can about finance. So from there, we started another company in 2008, right, fresh out of the recession, or I guess right in the recession. But, being kind of in an online business, we were somewhat recession proof and experienced a lot of growth. So in our first couple of years, really explosive growth. 2010 became a, Inc. 500 fastest growing company. Super exciting, to have, pretty, I don't want to say overnight success, but it felt that way at the time. And so
certainly when you're going through that success phase, that's when you're feeling it. And it seems like you're an overnight success, but Jitin said it best. He, in one of our earlier discussions that we were having, I sent out a message to the team. Actually, when we got funding from you guys, I had sent out a note to the rest of the team, and Jitin wrote it that, it takes months and months of blood, sweat, and tears and restless nights to become an overnight success.
Yeah, totally. Yeah, I mean, it was a time when we really were. I mean, we were a 24-hour business because we were online and, always worrying about whether, like our tracking software would go down. I mean, you really never had a moment of just like not being in it. So along the way, that really propelled us to do a lot of things that, had a lot of momentum going. We acquired a competitor. It was really a cool success story, really, because I like to say we got the company for free because the company had a ton in accounts receivables. And so we gave them, pretty close to what was outstanding. And we felt that, we had a pretty strong accounting and collections team that we felt that we could collect on the majority of these, even if they were, some of them were like 180 days out, and, give us another 90, 120 days. We pretty much collected on everything. And, you know, we didn't get the whole company at the time. We, you know, kept the previous owner on in a, you know, a small minority equity stake, and then later bought him out. But so again, just, you know, little pieces along the way that kind of led to where I'm at now. And then we've started some other, you know, similarly situated companies, kind of more niche of what we do now. And then got a handful of companies like that, and combined, you know, all these companies about $250 million a year in revenue. And so from that point, you know, we actually had grown some real businesses where we're able to, you know, I was able to replace myself. I mean, at the beginning, like I said, when I ran the finances, I was paying everyone, I was invoicing everyone. So, I mean, I didn't really have a lot of time to do much else. So, you know, over those years, we were able to add a lot of systems and structure. So from that point, obviously, it's kind of the natural evolution of any entrepreneur is you start more companies or you invest in other companies. And here we sit today.
So you're a entrepreneur or a dreamer, right? A dreamer turned entrepreneur, turned now angel, turned investor, turned wild trader as well. Let's not forget that. We need to talk about that also, because I was telling you earlier, I've been following your trading on or at least your trading talk on Twitter, and you're quite the talker. So we want to talk about that. We want to talk about that as well.
Side of me, but we could talk about it.
So Michael, tell me, you know, you mentioned a couple of things earlier. Why don't you expand a little bit on some interesting things that you mentioned? So for those that are, you know, some budding entrepreneurs, right, that are looking into the game, tell them the importance of failure, and specifically tell them about that time when, if you could go back to that, when you were a part of that, that initial company where you had traded in your sweat for equity, and what, in hindsight, everything appears to be 2020, and today experience, right? We are who we are today as a result of our failures, right? Talk about, at that time, the battle that you were sort of going through when, you know, I'm sure there was a side of you which was like, listen, man, this is here, the red flags are starting to go off. But then whether it's naivety or whether it's just gullibility that pushes us to say, you know what, let me put everything aside, and how that had an effect on you to become a better entrepreneur and ultimately a better investor.
Yeah, I'd like to think in hindsight that I knew that, you know, I was learning a lot. And so I put up with a lot. And, you know, obviously I didn't have the, you know, I was not the majority owner of the company. So it really put me in a difficult position. You know, I could voice some concern, but I didn't have a controlling interest. So, you know, looking back, it was a great learning experience. I mean, it was fraught with a lot of frustration, obviously, because it was, and disappointment, because, you know, I felt we built a really strong company and we could have been really successful had the funds not been mismanaged. But like I said, as a result of that, you know, it forced us into, you know, seeking investment, and really, you know, that world was foreign to me at the time. And, you know, getting exposed to that on that level was just eye-opening and inspiring.
And was that mismanagement of those funds, is that what sort of pushed you towards finance?
Exactly right. Like I said, I made a promise with myself that the next company that I get involved with, I will be the one that's responsible for the funds. You know, at the time when we started the company, I was the only signer on the account. I had 2 other partners at the time. And so I just, you know, that was not a mistake I was going to make again. I mean, because I felt like at the time that I had, you know, spent 2 years of my life building this thing for what, you know.
And so right now, why don't you talk a little bit about, because I want to get into the some of the digital asset side of things as well. But why don't you talk a little bit about our story, how we met, how did that come about? Because that's a pretty that's a pretty crazy story for the books.
Yeah, how do we summarize that? I mean, it was a mutual acquaintance, somebody that I respect a lot. He was actually our, I guess we would call him our inside outside counsel, our our company attorney for, oh, boy, maybe 7, 8 years. And so he's, above all else, he's a very good judge of character. And so anytime he refers someone to us, I can usually, you almost always count on that person being a solid person. And so, had you contacted me on LinkedIn or whatever, you probably would not have responded back, because I get contacted a lot for these types of things. So obviously the warm intro by somebody that you trust is just going to open doors immediately.
So it's funny, right? Because a lot of this stuff runs counter to what people may perceive, or at least being taught, right, in schools, the importance of character, right? I remember, like, that's the same thing, by the way, when I'm looking to hire people, when I'm looking to bring on, let's say, partners or things like that, I look at the small subtleties. Like, so for example, and this is one of the things, by the way, that to me, the big difficulty with this COVID situation has been, is that while we're all digital, while the technology certainly allows us to come together, but you're not able to find those subtleties, right? Like, for me, when I'm looking for some of those key decision makers to bring on, I'll, let's say, go out with them in a dinner, and I'm looking for certain clues. What is it they're saying? And by the way, in that dinner, we're not going to talk about business. We're not going to talk about work. We're not going to talk about anything associated with that. I just want to see small things. How are they treating the waiter, right? How are they treating the person that greeted them? How are they greeting them back, right? These kinds of things really define character. And that, when it comes to things like integrity, when it comes to things like values, those are just, you cannot put any kind of a number on that. And so for me, I agree that those are the same kinds of things that I look for as well, and are that mutual connection of ours. When he introduced us to you guys, it was quite interesting, because his whole thing was, the way that he did it was, he's like, don't do anything. I got these guys. Before you make any decision on anything, talk to these guys, talk to Michael, and that, talk to Michael, talk to Steve. These are the guys that are they're gonna make it happen. And I'm like, well, why don't you tell me a little bit more about them? And he's like, just look, I don't have time. I don't have time for this. He's like, just talk to them, get on a call, and that's it. I'm like, all right, no problem. And that's when the call happened between the three of us.
Yeah. Well, like, I think I mentioned, we talked a little bit about college, and like, not, a lot of it didn't seem to apply, just because we didn't have the relevant experience at the time. There was one thing that really stood out to me from like some of my business classes, and it really made an impression on me, was this, he was a consultant at the time, which, consulting for big, manufacturing companies, and he's telling me that, in the future, deals will be done on a handshake. He says more and more of this, this is going back, I don't know how many years now, but, almost a couple decades now. And, kind of like that would be the future. I thought, it's not these complex contracts, like your handshake is that deal. And, I always wanted my business life to be like that. I want to be able to say, like, hey, we're going to do this, multi-million, hopefully multi-billion-dollar deal, and I said it, so therefore it is. And I think that by being that way, you attract some of those same types of people into your life. And I just, you're going to go through people that are in it for, like, the quick buck and whatnot, but they end up filtering their way out of your life, I think, because, they do you wrong one time, and you kind of move on. And as you get a little more seasoned in business, the people that are solid stick around, and you build a long-term relationship. So it's almost worth going through some of the bad actors along the way, because it makes your base of cohorts that much stronger. So I don't know if I veered off the path there of kind of what your question was, but I think it comes down to that. I trusted him. I knew he vetted you. He wouldn't, steer me wrong as far as that goes. And then, obviously we took it from there and did, further due diligence. But we didn't do, like you said, months and months of due diligence.
Yeah, it was wild, man. It's the, it's interesting for the audience to understand that, in a startup, it's these situations that come across, and the value of these relationships that tend to make or break you. And these situations that you're in, where had you guys not come in at the time that you came in, we wouldn't be having this conversation today, right? Or at least, definitely we wouldn't be having this conversation today, but we ourselves, who knows what situation we would have been in. And integrity, right? So integrity is key. And it's interesting because with us, so for the audience, it's you'll probably appreciate this. What had happened with us was we actually had an investor beforehand. We had an investor, we had a commitment. They said they were going to come in, and based off of that, because I am someone like what Michael was alluding to earlier, right? That it's I've always believed that my word is my bond. So if I say something, it's going to happen, and that's it. For yes, we'll get everything on paper. We'll ensure that the I's are dotted, the T's are crossed. That's all there. But if I'm saying something to you, that's going to happen, right? Come hell or high water, I'm going to make sure that I'm going to make that happen. So generally, you tend to view the other side as being similar as well, right? So having that same level of integrity. So for us, again, I'm not going to go into specific names or anything like that, Michael. I'll take your cue from it. But we had this investor that came in. They said, all good, go for it, expand out. And I said, no problem. I started expanding out. And then at the last moment, they pulled out. They're like, well, look, I can't do anything. I'm like, well, what the hell do you mean you can't do anything? I'm like, I got a company here. We need to do something. He's like, well, look, I'm sorry. And literally went under. I couldn't get a hold of him. I couldn't do anything. So now it's like, what am I going to do? Right. Well, the reality is there's only, in situations like this, and this is what builds character, right? This is what defines character is what do I do? Am I going to cry over spilled milk, or I'm going to get back up, dust myself off, and figure a way forward? So that's exactly what I did. So I started making some calls, and that's when I made the call to Shane. And I'm like, hey, Shane, listen, man. He's like, hey, what's going on, dude? I'm like, look, this is what's happening, blah, blah. And he's like, stop, don't worry about it. I got these guys, rock stars. They're going to come in, and with what you're doing, exactly, they're going to get it. And that's exactly what happened when we met, right? We must have communicated on, and by the way, this was on again, off again conversations that we were communicating, right? For over the course of 1 week. I think that's what it was, right? We spoke one weekend on a Saturday, and then on Monday, the funds were in our bank.
Yep, that's how we like to do things. Yeah, I mean, coming back to kind of integrity and the people, and I mean, when you're talking about a pre-revenue company, there's a lot of good ideas out there, and I don't think there's a way to know which ones will work. I mean, no matter how seasoned of an investor you are. And so I think it comes down to, well, I strongly believe that it comes down to the team. I saw a strong team, and then ultimately I think it comes down to the leader, the CEO of the company, because it's hard. I mean, the statistics of businesses that fail, I mean, we know most do, is that 80 to 90%, I think, maybe the small businesses at least fail. So the ones that succeed, either get lucky or they have leadership that rises to the occasion. And I think we've seen along the way there's been some challenges. This COVID thing has definitely been an obstacle to overcome, and I was a little concerned, but I was sure when I talked to you, and I knew you were doing everything you could to get through it and keep growing. So you really can't tell, in the seed stage or pre-revenue, you can't use any of the typical metrics that you would use when evaluating a company, because it's not really a company, it's an idea at that point. So you're investing in people.
Look, you're absolutely, and I definitely appreciate the great compliment on leadership. But I'll tell you one thing, and this is really the secret behind being a good, if not even a decent CEO, which is what I've been fortunate to recognize. And the biggest strength that I have is the recognition of my own weaknesses. And believe me, there's a lot of weaknesses that I have. So what do you do? How do you alleviate that? The way that you alleviate that is by surrounding yourself with people who can more than make up for those weaknesses. And I say this all the time to people is that, when I am in a room with my team, I'm the dumbest guy in that room, right? And I would have it no other way. And it's a blessing to be surrounded with a team that can constantly challenge you and can constantly question what is it that you're doing, right? Why is it that we're doing it this way? Believe me, there's times where I question my own partners, and I'm like, no, why the hell am I dealing with these guys? Why do I have them here, right? I want to choke them to death. Mm-hmm. And at that time is when I realized that's an affirmation, right? That's a validation for me having the right team, right? Unless you want to kill each other and in that moment, and then yet once you get out of that moment, you can give kudos to each other and appreciate one another. That's the makings of a great team. And at the end of the day, a business is nothing else but a group of people coming together and executing on an idea. Because to your point, ideas are a dime a dozen, man.
And they evolve too. I mean, the original idea that you presented to us, I mean, it has evolved. Without getting into the weeds here, it's part of business. And good teams are able to do that. They recognize opportunities and they pivot.
And we had this conversation we had a very direct conversation about this as a part of the intro, right? When we were talking about revenue models, when we were talking about these things. And I said to you, I'm like, look, Michael, here's what we have right now. But the reality is this is going to change, right? This could change a month from now. What it's going to be like a year down, I don't know. But we're going to test out the waters. The most important thing is, here's the other thing too, right? Which is key, is for people to take a look at and see whether a team is willing to evolve as well, right? What we don't want to do is you don't want to get rigid and tighten up and say, this is the vision and that's the only thing that it's going to be. You have to flow with the market and see where things are, and then reposition, right? Say, okay, is this a priority today? Well, this could be a priority today, but depending on where the markets are, like for example, our priorities pre-COVID-19 were very, very different than they are now post-COVID-19, right? Yeah. So, the evolution of that is and the ability to be able to pivot and adjust is crucial.
Yeah, agreed.
So here's one thing that I think most people will find interesting, and I want to get your perspective on that, Michael, because ultimately you're the one that wrote the check, right? Talk about what prompted you, because when you and I had this conversation, it was we needed the funding right away, right? Because we expected the money to be in from the previous investor, and we were already that didn't happen. So now I had to pivot, and I had a conversation with you, which was a very interesting conversation. And what I said, so I'll tell you what I said, right? Or at least I'll tell the audience what I said, and then I want you to talk a little bit about what was going through your head, right? Because for us, it was very simple. I said, look, Michael, this is going to come across really, really strange, I'm sure. But if we go through the attorneys and get all this stuff put together, right, this is going to take time, right? It's going to take at least a week. And even that is a stretch to get lawyers to draft up documents and get all that stuff done. But best case scenario, it'll take a week. I don't have a week. I need to have at least, I need to have funding come Monday, Tuesday. And look, man, I'm a man of my word. I pray 5 times a day, and I wouldn't be doing any of this thing if my plan was to take your money and run with it. I don't know what else I can do. And this is, you and I are on the phone here, and I'm like, look, I don't know what else it is that I can do to convince you, but I need the capital. And I remember your response to that was, well, how much do you guys need? And we didn't ask for, I didn't ask for a small figure, if you recollect, right? The exact figure that I said was, I said, look, at a minimum, we need at least 50,000, right? And ideally we would need 100, right? So that's where it is. But even if you can just do that, this is more than enough for us, even the minimum that's required. And then you said, all right, look, man, I get it. Let me call you back. Take it from there.
Gotcha. Well, I remember a little bit differently. That was, I guess, like kind of the initial, because that wasn't I guess we had, I don't know if we had worked out the equity split initially.
No, we had, this is after we had that conversation.
Gotcha. Okay. My advice would be, generally speaking, don't do that. Because if it's a good deal now, it'll be a good deal in a couple weeks or a month or whatnot. So as a general rule, probably not a good idea. For me though, as I mentioned, I had done my research on the team. You came in as a warm referral. We did it as a convertible note, so I felt pretty good about that. So based on those things, you kind of have to go with your gut, and that's not good investment advice. So I don't advise anyone to do that, honestly. I do it. It has worked for me. So but otherwise, I mean, you can't duplicate that type of system. I think it's just something that comes with time and comes with, it's a skill that you can hone. Otherwise, you better have some really hardcore data to back up any kind of, large, investment decisions. Because if you recall, the amount that we invested was, significantly more than that to, for I guess we'll call it the seed round, pre-revenue. So it was, I mean, we believed in, like I said, we believed in the team and we believed in the vision. And, we haven't really gotten into digital securities, in this conversation, but it seemed like, not to get, if we want to get into the business model, but it's like the way I saw it here, we've got all these, Credit Suisse, Goldman, all these like traditional banking guys, and they're looking to turn that into, digital securities. And that was really compelling to me. So that mix, that was a good story.
What was it about digital securities that at that time, right? Again, that was in its infancy, right? During that time, what specifically was it that about digital securities that where you saw the value, and then from there until now, the evolution of the market space? What's your overall take on digital assets?
Yeah, I mean, I think we're early. The adoption, it maybe isn't what there yet, but but it makes good sense, and I feel like eventually, there's more and more adoption as we go, and the traditional banking system is just so archaic, and so having experience just moving cryptocurrency around and everything like that, it's like this just makes so much more sense, and what you can build into things with smart contracts. I mean, just purely from a technological standpoint, there's no better way to do things, right? The only thing holding us back is adoption, in my opinion, right now, because it's clearly a superior technology to do the type of banking transactions that we do today. From an investment standpoint, of when we talk about digitization of securities, it also democratizes investment, really, because to invest in traditional, opportunities out there, you've got to be an accredited investor. It's like you can only make money if you've got money, is how we've set it up. And it's kind of an unfair system, to be honest. So I saw this as kind of like leveling the playing field.
And don't get me started on the whole accredited investors rules that we have. I think that's that is such nonsense where we're babying people. Oh, it's for the protection of people. Look, my thing always is this, is that yes, look, don't get me wrong. We need to have rules and regulations in place. We need to protect people. Well, at the same time, we also need to encourage people and allow them to make mistakes. That's the only way people will get better. You would not be here today. You would not be doing what you're doing today had it not been for those mistakes that you made earlier on in your career. I certainly would not be here today and be who I am had I not made those mistakes. You only get better as a result of those mistakes. But the problem is, if we prevent people from making mistakes overall and saying, look, I know better than you, so just don't do that anyway, the reality is you're just going to halt any kind of innovation, and you're going to halt it. Ultimately, you're going to halt the economy. That's what's going to end up happening. And the advantage that us as the United States have always had, which is we've been at the forefront of innovation, where we've put innovation ahead of regulation. Unfortunately, right now we're not only are we lagging behind, but we're being left behind in the dust, man, in the dust. It's funny. I joke about this. I mentioned this the other day to a couple of my of clients that we were having a conversation with. We were just talking about the overall economic situation right now, and I said to them, we're living in this world today, in today's time, where the government is actually worrying about saving coal mining jobs, where what they should be really worried about is increasing Bitcoin mining jobs. And it just goes to show you where the mindset is at. And it's look, man, it's very, very, it's a very scary situation to be in. If I was sitting at the highest levels of the government, because I would be shaking in my boots right now. But the problem is, most of these people are oblivious to the reality that's happening, right? Yeah. Internet 1.0 came in, it disrupted companies. Internet 2.0 came in, it disrupted industries. Now with Internet 3.0, this thing is going to disrupt economies. And if the government,
not only from all the practical reasons that you described, slowing down innovation and things like that, but it's simply not fair, because as accredited investors, we're able to participate in early round deals and get some of those 5x, 10x, 1000x if you find your unicorn, and then all of those opportunities. And then by the time it goes in each round and then it goes to the public markets, the valuations are, it's kind of, I don't want to call it a Ponzi scheme, but in a sort of way, we take all the good stuff and then we end up dumping it on, when you get publicly listed. So I don't think it's a completely fair system either. Not only does it, stifle innovation.
I agreed 100%. So we're talking, you mentioned, you mentioned digital securities and digital assets. Let's talk about right now one of your favorite digital assets, Bitcoin. Why don't you educate us, or rather enlighten us into the great mind of Michael Durham and his thoughts on Bitcoin and the current markets right now, especially with the halving coming up.
Yeah, I mean, to be honest, I don't spend as much time on fundamentals, just because I look at charts all the time. So I feel like if there's anything there, it'll show up in the charts. And I mean that from, even if it's stocks. I was in a stock a couple of days ago. I posted about it on Twitter. The setup was amazing, and I traded into it, pretty heavily. And I was like, what? I should probably find out what this company does. And by the time I did, I was out of it and did quite well. But Bitcoin, I mean,
by the time you found out what they did, you weren't interested anymore.
I was already I'd made 15% on the trade. It was pretty clear in the chart what it was going to do. So it was a 15%er in 2 days. But anyway, with Bitcoin, maybe I'm not the best to ask as far as some of the fundamentals, and even with the halving, I tend to ignore it. I guess, okay, so then the supply is technically going to be decreased, so that should, make it more valuable. I think Bitcoin has its limitations. It opened our eyes to the world of cryptocurrency. I still see it as kind of digital gold. Right now we're looking for a hedge against the dollar with all the printing that's going on. And I was looking maybe I should accumulate some more gold. I go online and first of all, it's hundreds of dollars over spot price for gold and silver right now.
Well, hold on. Before you do that, let me call on the right. Hey, Peter Schiff, if you're listening, listen to this one.
Yeah. I mean, it's, in theory, it's great, but it's just not the way. So I think it's a good comparison then. 'Cause, calling Bitcoin digital gold, it's like, I can have a, infinite amount, well, within supply and what I can afford, but I can store it on a little thumb drive. No one can come and steal it from me, because I've got, the security of it. No one can hack it. A supercomputer would take, you know, thousands of years to crack. Gold, I've got to find a place to store it. It's, it's just, it's clunky in that way. It's not to say that, you should have some gold in your portfolio. I don't know if, buying the gold ETFs is the way to go, because I think that's sort of, it seems like a fractional reserve system. They don't even seem to have the gold that you're trading. So you're really just trading this paper asset that I feel like doesn't have the underlying asset there. So it's difficult then. Now it's time to sell my gold. I've got to pay another $100 over spot to sell it. So when you make that comparison, I think there's just no comparison there. It's so much easier to transact. I mean, I can move, I've got to have it shipped. I've got to pay for insurance on it to have it shipped. With Bitcoin, I can move like a ton, in a matter of minutes. Transactions have been going through a lot faster lately. I don't know if you've been, but the network has just become a lot more efficient. But that's how I see it. Simply put, I think it's a digital gold. We wanted it to be a payment system, and maybe it will be, but there's so many other good cryptocurrencies that can act as a payment system that I think are far superior technology. So I'm fine with it being a store of asset, a store of values.
I agree with you. I mean, it started off as the first use case for cryptocurrency, but there's been other technologies that could potentially take on that role of the cryptocurrency better. But really, what this has become, it is really, I think digital gold is the right way to classify something like a Bitcoin. In terms of the of digital assets, what else would be some of the digital assets that are part of your portfolio?
So I don't really hold a lot. I do have, I've got VeChain. I've been a node holder of it from way back. So, the idea there was that you stake it, you've got it, and then you make, kind of like the, I guess if you're not familiar with digital currencies, we'll call it sort of a dividend, right? Just by keeping a certain amount in your wallet, you make that dividend. And it was pretty compelling to me. It's a great use case. It's not just a use case, it's being it's a real use case being used as supply chain tracking right now, mostly in Asia, hopefully making its way here. Others, I just, back in 2017 during kind of the altcoin rush, I was all over them, and I could speak to you a lot more proficiently about, all the different ones, what they use. You've got Monero, great privacy coin. I could get into all that, but, from this point, I look at most of the assets as an opportunity to trade because there's so much volatility. I think it was Liquidity just signed a big deal. They were up 70% a couple days ago. So yeah, there probably a lot of them are good long-term holds. But if you can make a move like that, you've outperformed the S&P 7 times over in that example. And these come up all the time. If you go and sort the coin market cap by percentage increase, they're out there.
So if someone wanted to follow you and follow your tips on and see what you're doing, how can they find you online?
Find me on Twitter. TraderMDD is my handle. It's pretty much my only social media. I gave up Facebook quite some time ago, and that's pretty much it now.
I'm the same way. I gave up on Facebook. I'm still on Facebook, but I
haven't deleted my account. I just noticed I'm a lot happier since I got off Facebook.
Yeah. Yes. I'm on. I'm also. So I'm generally either on Twitter or on LinkedIn. These are the two platforms that I'm generally on, and I'm following these things. Well, Mike, look, we're 45 minutes into this. I know we were originally scheduled to do this thing for 30 minutes, but generally, we've gone over by 50% of our allocated time. So
right.
It didn't even feel like it really. This has been. What's that?
I get a bonus, I suppose.
This has been a fantastic conversation, man. We should definitely do this again, and this time we should do it with your partner in crime.
Sounds good.
That's gonna be a very interesting one. Anytime Steve is on, things get quite interesting.
Yep, definitely brings a different perspective.
Awesome. All right. Well, look, Mike, thanks for joining the Liquidity in the Markets podcast. We'll love to have you on again. Thanks, guys, for joining us. And again, I'm your host, Syed Hussein, and I'm looking forward to connecting with you guys on another episode. Thanks.
That's good.